All right. Are you ready to buy a home in 2024, but you're worried about your credit? Or perhaps you're a realtor and you have credit challenge buyers. Today, I'm going to be talking with Beverly and Juan from UQual, which is a loan readiness program. Unlike anything you've seen before, as far as credit repair and people looking for home ownership. So this afternoon, I want to thank Beverly and Juan, and I'm going to bring them onto the stage to talk about you qual, meaning you qualify is what they I think they mean that they want to do to help you become a homeowner in 2024. I want you all to get to a closing day. So, Beverly and Juan, thanks for being here. I really do appreciate you. Who wants to start talking first?
Well, I'll just go real quick and just introduce myself. So I'm Beverly Wright. I have been in the mortgage, real estate, credit industry, combined all of those things for 21 years. And we've just always had a heart for helping borrowers get their scores up, get loan ready, because they don't know what to do. They don't know where to go. They don't know what to start. They watch TikTok videos and think that that's what I'll do. And they don't understand there's a strategy to this. And that's where my buddy Juan, otherwise known as JP, comes in. And he's going to tell you all about how we can help and what we can do for you. So take it away, JP.
Thank you, Markita, first and foremost, for having us. Thank you, Beth, for the introduction. My name is Juan Burgess. I'm the regional director here at UQual, and I've been studying the FICO algorithms, so just credit algorithms in general, for, about 12 years now. And just like Markita said, our mission, we exist to get people to that closing day. We exist so that you, as a realtor, can tell more people you qualify. So we all know that right now, in absolutely every financial sector there is, everybody's either integrating artificial intelligence or they're in a race to do so. Well, the beauty is that our loan readiness program has been implemented for about 3 years now. And we have the privilege, and I will say the advantage, of being able to look at thousands upon thousands of credit reports. And it really helped us to put data together so that we can create a plan for every single borrower. A lot of people are like, well, if I do this with my credit, what will happen? And the answer is I don't know, because everybody's credit, it's truly a fingerprint. So what might be good for somebody may not be good for you. It's like, I hear a lot of people, oh, well, my cousin told me I need 5 credit cards to have good credit. And then Marquita's going to look at the report like, oh, Lord, 5 credit cards maxed out. So a lot of the stuff that we're bringing is very different, very, very different, because like Markita said, this is unlike anything that's ever been done before, in the sense that credit is just one part of being loan ready. Okay. You can have great credit, and Markita, correct me if I'm wrong here, but if you don't have savings, if you have a 70% debt to income ratio, if you're spending $300 on DoorDash, probably not going to be ready to qualify, even though you have a 640 credit score, right? So we want to give people all the tools to take control of their credit, but also control their money, okay? Because today you're running around with 5-6 different apps on your phone that are not really driving everything together, right?
Wait, what do you mean? So my Credit Karma score is not legit?
So I know you've had this conversation. No, all the credit scores that we get from online sources, so what we call consumer available scores, on average, and I can tell you specifically with your company, they're going to be about 46 points higher, because the lender has to look at what we call historical data, right? It's 7 years. I want to see every skeleton in that closet. Mm-hmm. But all the apps, they only look at 24 months, right? So on a very, very serious note here, 2 years ago, we were all in the middle of a global pandemic, and people unfortunately lost their job. They lost their hours, right? They couldn't pay their car loan because they had to keep, food on the table. There were other priorities. So The idea is that regardless of what the client has gone through, whether it's credit issues, whether it's financial hardship, right now, I'm sure you heard, we just hit $1.08 trillion of credit card debt.
Wow.
Trillion
Really?
with a T. And honestly, I don't think we're getting out of it.
Oh,
Well,
really?
what's going to happen to credit scores naturally here coming even this week, right? People are out there still shopping. And you train all people. This is one of the biggest myths about credit cards. You tell people, hey, how much of your credit card should you use?
What do they
Most
say?
lenders are going to say what? 30%.
30%, right.
30%. Do you know that as of February, the data that we've been able to compile through AI, it's now 10%?
Wow.
10%. So this is
So
me
we need
saying,
10%.
Ms. Wood, here's $1,000, but if you use more than $100, I'm going to penalize your credit score.
Mm-hmm.
Wow. So credit utilization is very important, and all the time we've been advising at 30, but you're telling me it's really down to 10%. That is an actual nugget for somebody looking to raise credit scores right away. So can you give us some more insight on how UQual is different? Maybe some slides or some information that you want to show, because I'm super impressed that it's just not credit repair for the sake of repairing credit, but to really get someone in a position to buy a home.
Perfect. So let me introduce you to Alex. I'm going to go ahead and share my screen here. And we're going to go right into it. So this is Alex. She is the digital assistant that every one of our clients is going to receive. And she's learned every single aspect of what we need to do for that particular client. So this example that I'm showing you, it's a client that potentially has late payments, collections, charge-offs. We're seeing a ton of late payments on student loans. So Alex is going to help them to review their credit, because we are digitally integrated with the 3 bureaus. You know, the famous keep your enemies close and your enemies close, or your friends close and your enemies closer. That's how close we are with these bureaus. So it allows our clients to go after any item that might be harming them or harming their credit score digitally. I don't waste your clients' time or money trying to talk to creditors and collectors. You get nowhere. You might as well yell at a wall all day. For clients that don't have credit, and you know this as a lender, having an open and active credit card, it's 30% of our credit score.
Yes.
And now we just talked about not only having an open and active credit card, but keeping it below 10% of the limit. It's also helped us to create what we call our loan readiness score. This is not just credit. We're going to look at 114 different parameters, from finances to having your documents in a row. And so what is it that we're teaching Alex? This is just one of the many scenarios that she's learning, which is, should you not pay a collection? Okay. We all know that paying a collection is good for your debt to income ratio, but most people, what they don't know is that paying a collection does not remove it from the credit report. So in most cases, it's actually going to lower your credit score to pay a collection. So what are the tools that the clients need and get through UQual? The first one is going to be the money platform, allowing them to optimize money. This is going to tell you where you are, okay? How much money you got available, how much money you got put aside from your down payment. And I want you to keep in mind that this particular scenario, the client is still short $5,750, okay, for their down payment. So we're going to create a budget based on the national budget. And it's not only based on the national budget. The national budget is basically what the government says that should be or should not be part of the American budget. But we're also going to do it by your region, right? Because I can't compare somebody in the North Virginia area to somebody here in Colorado, where I'm based out of, right? The cost of living is very different. It is also going to allow the client to manage it. So if the client clicks on out on transportation, they're automatically going to get a full report of what is part of the national out on transportation budget. That is your car payment, your car insurance, gas, public transportation, vehicle maintenance, okay? Anything that is not those 5 things, it's going to become uncategorized. So when you're spending way too much money, this little bubbles will go from green to yellow. And if you're spending way more money than, say, your neighbors on shopping or whatever the case may be, they recently have added pets to the national budget. So say you're spending a ridiculous amount of money here, it's actually going to turn red. And when a bubble turns red, Markita, what that's telling me is that I need to stop. Whatever that money that I'm putting in, whatever that is, most cases what we're seeing is streaming services and delivery, food delivery, DoorDash, Uber Eats, blah, blah, blah. Okay. So it helps trying to create a habit-changing habit. Because if I do it over and over and over again, eventually it's in my head that I don't need to be spending that money. For clients that fell in the credit card trap, and we see a lot of that, we just talked about how much money we owe, it's going to create a way for them to get out from under credit card based on their income without asking your client to spend more money or allocating more funds. So it's going to learn the client's income because you're able to link your accounts to the platform, and it's going to say, hey, if you do what we tell you to do and you pay things on time and in this order, utilizing either the snowball effect or the avalanche effect based on the income, you will be out of debt by X amount of time and you will be saving X amount of dollars. You know how I know that? Because it's math, okay? It's just math. The second thing, we need to help them manage their credit. Here where there's a lot of blur lines, so we give our clients a brand new credit report every 30 days. No more excuses of not knowing what your credit looks like or why, okay? We're also going to give the clients a simulator because you got to love it when you got a client showing to the closing day in a brand new car, okay? We don't like that. So let's just say that the client is thinking, maybe I'm going to get a new car. Well, they can easily click in any of these options. What may happen if I get a new loan, your credit score potentially goes down. Let my accounts go past due, your credit score is definitely going down. Closing my oldest account, scores goes down. You get the gist. Everything here in this particular scenarios will make the credit scores go down. But let's just say the client still wants to check. So they can click get a new loan. Alex is going to ask what type of loan. Oh, well, it's a vehicle. It's a car loan. Perfect. How much? $40,000. It will automatically calculate. The 601 will become a 546. And now you no longer qualify for a home loan. Okay? So it'll tell them the reasons why they shouldn't do that. Diluting your length of history. You're going to affect your DTI severely. You're also putting yourself at risk of creating new damage to your payment history, which is different from credit history, by the way. This is our integration with the bureaus where the clients can go after any item that is taking points away from them. I don't care if it's an inquiry or a Chapter 13, bankruptcy, public record. If it's on the report, it can be investigated, okay? And ancillary things that we all need. This is for you realtors, you're welcome. We have scheduled coaching calls with human beings with the clients. So it's not just artificial intelligence. We obviously have the human element because we want these people to feel cheered for, to feel encouraged. And that's what our team does. But while we're talking to them, we're going to let them know that, hey, it's time for you to load up these documents, bank statements, W-2, tax documents, anything, so that they're ready at a click of a button to get all those important documents for the mortgage to you. I heard a stat that if you spend 20 minutes Monday through Friday collecting documents, that's 86 hours a year. We're also going to provide every one of our clients with identity theft. In fact, before we went live, I was talking to you about how I spend most of my morning helping somebody that became a victim of identity theft. And unfortunately, it's a loved one. Most of the times it's somebody that we know. So we protect our clients up to $1 million. We're going to be scanning for phone numbers, email address, medical IDs, addresses, social securities, driver's license. If any of that lands in the dark web, we're going to know. We're going to make sure the client takes action. A lot of times it's as easy as getting a report out to the Federal Trade Commission. And then my personal favorite, the Learning Center. This is where you give clients a plethora of information about getting ready for the jump from FHA to conventional, about better ways to save money, to budget, home buying, obviously credit. Credit is a super, super obscure topic nowadays. So I want this information out there, and this is why we're doing this. And we also keep everybody informed, everybody together. So our partners, real estate agents, lenders, have this beautiful portal where they can keep track of their clients, their progress, and know when they're ready to go ahead and get ready for that home loan. The ultimate point of our program is to get these people to the closing table so that you can tell them you qualify in 2024. So that is the platform. And again, it's just a matter of following advice and following the expert.
That's amazing. Thank you so much. And I saw it and thought, you know what? Just like one of the comments from Bruce, that it could be potentially a game changer. As you mentioned, there's so much going on with credit right now. And what I really liked from what I heard, and correct me if I'm wrong, is that this also helps the people to change habits. So that I thought that was very good, that a person who's serious and has a goal and wants to get it done will actually be notified when they're spending too much in a certain category, because it's not just credit repair, it's mortgage loan readiness. And I think that is something that we need to let people to know the difference between getting someone into a mortgage versus just repairing credit.
Yeah. And remember, most importantly, right, especially today, people don't like being told what to do with their money, right? I don't like people telling me what to do with their money. You, the lender, don't want to have that responsibility, and your realtors sure don't want to have that responsibility either. But think about why those bubbles in the budget are green, yellow, and red. What is that? It's a stoplight. And it's called a stoplight approach because we as human beings, the moment we see a big red bubble, it triggers a response, which is stop, right? We know that yellow is cutting it close, like, ooh, I squeaked by there. But that's the beauty, is that using behavioral analytics, we're able to bring these tools to people so that they themselves, and they say it takes 21 days to create a habit. So if 21 days in a row, you're consciously saying, no, I'm not going to order food out, I'm going to go to the grocery store and cook or meal prep, whatever, that fixes one main question. Well, Mr. Burgess, how am I going to go from paying $2,500 for rent to a $3,000 mortgage? Very easy. We help you tighten your budget. We help you make those behavioral changes. And then you got good spending habits, right? And there's that money.
Right. Yeah, I agree with that. And I think most people aren't really paying attention to their budget so much. They look at their account and go, oh, yeah, I got money. I can get a Starbucks today. How much did you spend on Starbucks this month? Do you know? Do you know that if you're buying 2 of them a day, you and your hubby, you could be at $400, $500, $600. Do you want a house or do you want a Starbucks? Go buy some espresso machine and make that at home. You can do that. That is an investment that is absolutely worth it. So you just have to, it's all about learning where my money's going so I can prioritize my real goal. My real goal is owning a home. And the statistic out there is that homeowners are 40% wealthier than renters. And that is a fact because they have all this equity that they have built up in their home. And you can't beat that. You can't beat that. That's how you create wealth. Honestly, one of the ways. So yeah, I love budgeting. It's great.
And Bev, I did the math because I was like, oh man, the Starbucks, you just called me out. $12 5 times a week. $12 5 times a week. That's $3,120 a year.
Wow.
Ooh, what could you do with that?
That adds up quick. So we have a question. And the question is, we have a client with the timeshare that they are attempting to get released from. Can UQual app assist with this type of situation?
So the answer is, it depends on what is the current status of the account. As you know, timeshares report as a mortgage. So my number one advice is they're still actively making payments to continue to do that so that you don't get reported late, okay? For somebody that has a 760 credit score, one late payment will take away 172 points on average. 172 points, one late payment. So do not go late. Because guess what? That then gets reported as a late in a mortgage. And we all know you can't have late on a mortgage in the past 12 months if you're trying to buy a house. Okay. The second advice is going to be documentation, documentation, documentation. You want everything in writing. Okay. I have a client, her husband passed away. It was part of the state. And if she had not kept everything that showed that she had been released from it, that thing would have sat on her credit report for 7 years. So if the account is now in a collection status or a charge of status, then yeah, that is something we can get involved in and try to find resolution. But again, if the account has not yet been sent to collections, do everything that you can to get caught up while you're trying to get yourself released from that obligation.
Awesome. So I don't see there any more questions, but thank you so much for coming on. What's actually next is if you guys want to have a consultation or have borrowers that need buyers that want to buy and they already know their credit challenge, you can jump right into UQual.com. Is that correct?
Yeah, or most importantly, because, and this is thanks to you, anybody that calls in or reaches out to us or Beverly and brings up Markita, they're going to get a free consultation. And there's no obligation to sign up.
I appreciate that for bringing up Markita or the Queen of Mortgages. If you want to actually have that consultation in advance and I do the referring, which may be another level of accountability, then just visit chatwithmarkita.com. Beverly and Juan, I really appreciate you all being here today. And again, they can reach out to you directly at uqual.com, correct?
Yeah.
All right. Thank you so much for having us. We appreciate you, Markita. Have a wonderful Christmas, everyone.
All right. I appreciate y'all. Thanks.
Thank you. I'll be well. God bless.
All right.
Bye.